Now here we're going to pivot into what's happening in the international market, what's happening with OSPs, what's happening with the physical world. Here, when you look at Saudi, you can see that they raised prices across the region. When you look at Asia, they increased light by 30 cents, they super light by 60 cents. So again, all of these things are helping the U.S. We are very competitive when you compare it to these prices, and I'll show you the seasonality chart just so you can get an idea. U.S. prices are still absurd. There's no reason to be buying the U.S. to be buying, Saudi just based on where that that differential is. Europe, again, also saw a sizable increase, but not much was being purchased by Europe. A lot of this is coming from CPC. A lot of this is coming from the U.S., which is also, again, reflected in the Mediterranean. So then when you kind of put it into perspective, Middle East, Arab, light, crude, Saudi to Asia, you can see that based on the last 10 years, differentials are much higher. They're obviously not where they were last year, but they continue to be elevated. And under this backdrop, there's no reason to be buying it. You're going to look elsewhere. You're going to look at West Africa. You're going to look at the U.S. You're going to look at ESPO, Russian Urals, Iranian. You're going to look everywhere else before you turn back to Saudi and in terms of just pricing, which is why you're going to continue to see that be fairly low. And you're going to continue to see those different headwinds in terms of purchasing. Middle East, Arab light crude, Saudi to Northwest Europe is now above where it was in 2022. Again, there's nobody that's going to be paying this. There's no reason. You're going to buy U.S., you're going to buy Nigerian, Angolan, CPC, Libyan. You're going to buy anything and everything prior to obviously paying up in this regard. And that's why when you start looking at some of the pricing, the other Northwestern Europe and North Sea prices have remained fairly flat. Realistically, you should have seen a little bit of a tightness in pricing and differentials. You did not get it. And that's just because you're starting to get some of that slowdown, given there's still a lot of crude and floating storage. You're getting storage building on the land side. You have refiners that have slowed down some runs in Europe, especially on the topping front, just because of the gasoline glut, which is why you're seeing some of these reductions. So even though you have this increase in OSPs, nobody is sitting there and looking to pay for it. And then just highlighting Middle East Arab light crude Saudi into just looking at a different metric, you can still see it's remaining very elevated. This has opened up the opportunity for Iraq to increase OSPs, but obviously they're not increasing them to the same degree. So you will see some movement. Dubai, when you look at the Murbain versus Dubai, some of the different levels, when you think of it from a Brent perspective at about 86, 84, that's going to help move some of this crude. But again, it's just how do you compare when you look at Kuwait versus Saudi versus UAE? Obviously, UAE and Iraq would be the favored in comparison to some of these underlying flows. And just putting that into perspective, Iraq heavy selling into Asia is still, technically cheaper than where it was in 21, 2019, 2020, 2022. So it's gone up, but there's still, the heavy side is still priced to move. It's going to help undercut a lot of that Saudi purchasing. So again, you're going to be buying more from Russia. You're going to be buying more from Iraq. You're going to be buying from Iran. Again, speaking about Asia, more likely China and India in terms of some of these underlying flows. When you look at basrah heavy into the U.S., you can see that it's actually fairly cheaper than it has been in previous years. It's still an opportunity because we still need this crude. This will promote more or at least stable buying from Iraq versus other areas, just to kind of put it into perspective, because we need distillate. We need that heavier crude, and that is going to be priced to move a bit faster. And then when you look into Europe, they actually gunned it into Europe, but in comparison, but they're not looking to buy the same heavy. They don't have the same type of crude capacity the way we do, where we really need this. And that's where you're seeing some of that favorable pricing, or at least in comparison to some of these others, which is what's going to keep things flowing. So now when we pivot a bit to gasoline and distillate. So it's interesting because when you look at exports, you can see China had a big increase in exports. India continues to export at a very high level in comparison to some of the other years. And it's just, why not take advantage of this price? Distillate storage in Singapore is down. In Fujairah, it's down again. In Atlantic Basin, you're being paid to send this stuff abroad. So might as well. The problem is China, especially on the gasoline side, is running out of their export quotas. So they're going to have to put out the third batch. That's going to be a big focal point, because what does that third batch look like? Is that going to enable them to put more into the market as they continue to run a bit higher? But it's not just China and India. You continue to see the exports coming from Russia as well. When we look at the underlying flows, you can see it was elevated, came down a bit. But as that came down, remember, as we showed in last week, you actually had an increase in expected crude exports. So it's that balancing act. As crude exports go up, distillate and refined product exports come down, and then it reverses. So you can still see it's still trending higher than it has in previous years. It's just going to stay at the higher end, especially based on what we saw from the August expected flows. Saudi still setting at a very high level. You can see it's the second, or right now at this point in total, it's the second highest it's been in a long time. Third highest when you start blending it together. Through 2023, it's at the very high end, and you can see it's staying elevated because, well, why would Saudi want to export crude at this point, where the margin and the value of exporting that refined product is so much higher? And that's why we continue to see a lot of these flows coming through. You continue to see a lot of this product entering the market. So then when you look at crude oil in the water, it continues to drift higher. We're back to the levels that we were at back in late May, early June, continuing to trend up. And that's just, and one of the things that we've been saying is it's going to be that chevron pattern. It's going to be that up and down. We're going to stay in this band, but still stay elevated. Russia's still dumping a lot into the market, which is why, a lot of this is all obviously on the water, which is keeping things underlying elevated. Then when you look at crude oil in transit, we're getting more in transit. We're now back to where we were at the beginning of April, middle of April, really. So you're still seeing that there's a lot of crude out there. Miles per ton is increasing. So when crude oil in transit goes up, typically you see crude oil and floating storage come down. Normally you see that movement happening in the Middle East. You see that happening in West Africa. And then as it goes into transit, a lot of it has been showing up in Asia. So typically, Asian floating storage goes down. And then as transit goes up, then you start to see that show up and get planted in that area in terms of some of these underlying flows, especially when we look at volumes going into Asia, which we'll talk about in a minute. Crude oil floating storage, trending slightly down, but given the amount in transit, it actually should have been a bigger drop. And you're starting to see some of the stabilization. We're above where we were in 2016, which is a concern when you consider the fact that was the price war. So obviously it's well below where we were in 2020, but you still have a lot of crude sitting out there in boats, a lot of crude that is moving into the market, and a lot of that is targeting Asia. When you look at floating storage in the Middle East, we're hanging around where we were in 2017, which is in 2020, which obviously is not the best comps. You saw some of it come down. That's some of the moves that have happened from Iraq, from some of the other areas in the UAE and Kuwait. We still have seen a drop in total sales from Saudi. So again, you're still staying at that higher end, and this is going to be important to watch. And as OSPs went up, we could very well see this go back up because people will opt for other grades. And this is an interesting one. Obviously, we like to look at what's happening between naphtha and fuel oil. Here you can see naphtha is kind of going sideways. Fuel oil starting to pick back up. And it's just, you're still seeing the fuel oil. There's the arb is closed between east and west, west and east. So you're going to have to either recrack, blend it, doing something with it, which is why you could see some of the distillate levels go up slightly, just as they look to blend, as naphtha just doesn't have a home at this point because refiners don't want it, especially given the amount of light distillate in the market, the amount of gasoline in the market, the reduction in topping units. When you look at the U.S. 4-week rolling average is just over 4 million barrels a day on exports. Again, there's a bit of that makeup number. We're gonna continue to be at these elevated levels. Saudi only helped us, especially when you look at the increase in light and extra light going into Asia. It's just going to continue to keep flows at these very elevated levels, which good or bad, it is what it is. Then when we look at Singapore and crack spreads, you can see that distillate crack spread, gas oil crack spreads in Asia continue to trend up. Which is why we've been talking about India increasing exports, China increasing exports. Why would you not try to take advantage of that? Iraq has maintained a certain amount of presence, just given the discounts that they've opened up versus other crudes. Obviously, looking at Saudi and other, but it's again the price is elevated. That's why we have to look at West Africa. We have to look at these opportunities because light crude is available. It's just heavy and medium is where we see a lot of that underlying tightness. Here, when we look at the spreads, you can see that Brent continues to trade at even a steeper discount. Again, Dubai is what is going to happen in the Middle East is going to be interesting because the UAE has tried to set itself apart from Saudi. With the creation of Murbayne futures, getting rid of some of those destination clauses, do we see a bigger pivot, given that there continues to be, this tightness in the market that you could take advantage of if you're willing to, I don't want to say break, but let's just call it produce above your allotted quotas, which you will be paid to do so. Asian floating storage trending back to 2022 levels. One of the things that we were saying was going to live kind of between 2022, 2021 and kind of live there. That big increase in transit is going to show up here. So we do see floating storage staying elevated. It's, again, it's always timing delays. When does the floating storage show up? Asian, Chinese supertanker crude imports continue to be elevated. It's now above where it was in 2020. The interesting thing is you can see how quickly they could disappear, and that's going to be the unknown. When do we see a big pivot in some of these Chinese imports because they continue to take advantage of Urals, of ESPO. They continue to take advantage of Iranian. So there's a lot of reasons to continue those imports to be elevated, but at some point they're going to have to balance the market, which is increase runs, but increase refined product exports because they just don't have a lot of demand internally. The demand has continued to actually fall more than what we expected. And it's funny because people talk about, us and being bearish demand, but yet demand is below even what we were expecting. And I think it's very interesting to see some of these pivots, which is why, relying so much on China is a concern because they can stop or adjust fairly quickly. Shandong independent refiners in 2023 operating at 64.1%. In the 5-year average is 65.3. Last year was 67.4. So they're starting to close that gap, but they're a bit behind in terms of where they've been. And as they ramp up, that's going to put more product in storage because we don't have a lot of demand. And typically, they front run their quotas. So if they get a nice export quota, this will enable them to capture that quickly, because congestion continues to trend down. And when you look at it in comparison to 2021, it's slightly better than 2021. Excuse me, but it's right in line with 2022. And if you look at the comparison. In 2022, you still had zero COVID policy, so you're not looking at great comps in comparison. And it's more indicative of the slowdowns that we've seen on their economic prowess. West Africa floating storage ticked back up. You can see we do see this coming down a bit because we did get a bit of an increase in flows from Congo. Angola's selling at a similar pace to the beginning of last month, so not too much one way or the other. Nigeria is a bit slower, which is, again, resulting in this. But now that we have the OSP announcements, we'll likely start to see some of that clear a bit faster. U.S. exports for motor gasoline increased 123,000 barrels a day above the 5-year. Now above the 5-year, distillate increased 197,000 barrels a day. A lot of that was driven based on what we've seen in terms of just pricing. And then when you look at propane, propylene, bounce back 521,000 barrels a day, well above the 5-year. That's going to stay the case. Total crude exports went from 5.2 to 2.36. Again, 5.2 was wrong. 2.36 is wrong. It's going to bounce back and forth. It's very lumpy. That's why we've been saying it's important to look at the 5-year average. It's important the 4-week rolling average and where a lot of these boats are going. It's going to continue to be fairly strong given what Saudi has done for us in the market. Gasoline continues to remain elevated. As you can see, we thought it was going to fall back to the 5-year, tick back up. We do think it trends back towards the 5-year, but here you can see that they're trying to manage storage, especially in pad 3. And if the margin is there, they're going to send it into the market. Distillate, as we were saying last week, the arb was wide open going from the U.S. into Europe. It was actually so good it attracted 2 cargoes from the East Coast, which is very rare, even in normal years. So that's where the arb remains open. We'll continue to see flows staying fairly strong from the Gulf of Mexico into the European markets. Again, crude oil exports are very lumpy. That's why we talk about the 4-year average as we discussed. Propane, propylene, still going to stay strong, going to stay above the 5-year average, going to stay above the cloud on average and setting new records. It's just because we're priced to move. We're increasing production of NGLs, which is putting more into the market. So again, things remaining strong. U.S. ethane exports continuing to remain elevated. We don't see that changing, just given the Chinese demand, Chinese movements in general. Then when we turn to some of the things that we're seeing on the Fujairah side, so on Fujairah here you can see that light distillates increased again. Middle distillates dropped. Resid dropped a bit, but that's a lot of fluctuation back and forth. But light distillates is where we're going to talk about for a minute. So in total, they were reported at 18.516 million barrels. That's a drop of 1.2 million barrels. Let's break it down to its pieces. Light distillate increased 60,000 barrels. East of Suez gasoline complex was fairly range bound and weakening a bit. And that's just based on the new oil product exports from China, which it looks like they're front running a bit. Market participants highlighted the importance of these exports as Chinese exports have already exhausted a substantial portion of their existing gasoline, which is why we've seen a lot of that getting dumped into the market. And again, front loading the fact that they're going to get a bit extra. Middle distillate fell 446,000 barrels to 2.199. East of Suez gas oil market was softer, and that's where a lot of these queues, because the east-west arbitrage lanes remain shut, trapping some of the barrels. Expectations of outflows from Northeast Asia, particularly China, weighed on the Asian gas oil market with some of these uncertainties. Given some of the quota holders, sustained weakness in east-west arbitrage trapping Indian and Persian Gulf barrels in the region, which is why we do see this going up. But famous last words, because we said that last week, and it fell 446,000 barrels. So it's still very low, but there's still the economics keep it locked. And then the question is going to come, what does China put into the market? And that is going to be a big piece. Heavy resid fell 818,000 barrels. Spot trading activity was seen, fairly average. And then when you look at some of the forward-looking, you see some of the slowdowns in demand, which again is going to put more heavy resid in storage. More light disty. Middle distillate will get a small build, but again, it's still going to be at a very low number in comparison. The time spread for Brent exploded higher, just as you had backwardation increasing, especially when you looked at some of the underlying flows, pricing things to move, especially given some of their favorability versus some of their Middle Eastern counterparts. When you look at flows, Norway is back, moving back to the highs. Johan is at a record. Nigeria has more in September because remember the deferrals. Angola, same thing, a bit more deferrals from August into September. And then when you look at Russia, they've come down 400,000 barrels. When you compare it June into July, which is well above what the market was expecting. It wasn't quite 4, but it just kind of puts it into perspective in terms of where it was. It's gonna be something closer to about 3.7, 3.8. But remember, they're also exporting more product, kind of tying into that. Libya is continuing to be at about 1.01, 1.05. We don't see that changing in the near term. When we look at oil builds in Europe, you can see we're back to 2018 levels. The only time we were higher was 2016. So Europe actually has the highest storage that they've had in all of 2023. So again, you're still trending up, which a lot of that is driven based on the slowdown in demand in Europe, the slowdown in runs based on the lack of gasoline demand, the elevated amount of storage, and that again is going to put pressure on those underlying crack spreads in the region. When you look at underlying flows, gasoline had a draw of 58, gas oil had a build of 68, and fuel oil had a draw of 78. So again, you're trying to get some of this balancing act. When you look at the gas oil side, it's actually a bit higher. I'm sorry, this is fuel oil. When you look at gas oil has actually come back down. You can see even though it's getting to that build, it's still below the average. So again, the average is still coming back up, but they're incentivizing it to move. They're pricing it to move. Gasoline is now below where it was in 2020, 2022. A lot of that is because of the slowdown in runs as well as the increase in exports. You could still see we're still very high. There's very little demand in Europe right now in comparison to quote unquote normal years. So again, that's going to keep that there and flowing. And then fuel oil still remains at the highs. It's just below where we were in 2020. We don't see that coming back down. Again, the problem between West and East, East and West is going to keep this stuck in that region. And then as we were talking about Singapore, we expected it to move back in total back to the 19-year average. So again, moving back to the 19-year average, very kind of normal here to see those moves. Then when we look at light distillate, a lot of that, as we've been saying, is creeping back up. We see that moving back when you look at exports from China, exports from India. That trend is going to continue, moving us closer to where we were in 2020, as you can kind of see us following that 2017, 2016 level. Light middle distillate though is low. When you look at this, it's going to stay low. There's all the more reason to put more of this into the market, increasing those exports from Russia, from China, from India, because storage is still low, the crack is still high, and that's going to continue to keep things moving. Resid right back up. A lot of this is driven based on the slowdowns that we've been seeing in terms of activity on the shipping side. We don't see that pivoting around, keeping that elevated. And then when you look at North Sea, on the floating storage side, still staying above where we were in 2022. Some of that will start to move as Europe came down a bit, which again also showed some of those builds in terms of storage. We're still fairly elevated, so there's still more to come, which is why we do see some of those elevated builds continuing in Europe. So that's what we have for you today. If you have any questions, please feel free to reach out. We'd love to hear from you, and we hope you enjoy the rest of your week. Thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.